It is your February mortgage market update, the Valentine's Day edition. Yes, so that's the first thing. If you guys didn't realize today is Valentine's Day, it is. So if you have a wife, a husband, boyfriend, girlfriend, whatever your situation is, this is the universe's way of saying, you better go get them something right now. And if you're like, oh, they don't like commercial consumerism, everybody likes flowers. I don't care if you're a guy or girl. Everybody likes chocolate. It's delicious. And who the heck doesn't like a diamond? Men, I know you guys like them too. So that's your sign from the universe. It's Valentine's Day. Don't forget. Okay, number one. Number two, everyone's always like, what's going on with rates? It's a roller coaster. I say this like almost every single video. It's a roller coaster. The Fed has said they're going to raise rates in March. Until they do something in March, it's going to be like this. Oh, how much are they going to do it? Are they going to do it this much? Oh, what about this? What about this report? It's going to be nauseating. It's not going to be fun. Interest rates are in the mid threes for conventional, based on what we're seeing around the nation. Things to keep in mind. So what you want to do is you just want to be very mindful that all rates are not the same for every lender, because I hear that a lot. I hear, well, it doesn't really matter what lender you go to, the rate's the same, right? No. Lenders have a ton of impact on how much you get charged for a rate. I've been looking at a lot of pricing. I look at pricing to begin with just because we're on the phone all day doing rate comparisons, but I am seeing such variances right now, like in every category. Like I was pricing against someone on a conventional loan and they were 0.5% higher. I was pricing with someone on a VA loan and I almost went across the phone to find out who their manager was so I could smack them up aside. It was bad. It was bad. So it's important that you guys are rate shopping and you're also listening and asking, what is the lender's origination and are they charging discount points for that rate and can they lock you at that rate? Because what we're seeing is we'll see people are in contract and they're like, oh, I'm getting this great rate. And I'm like, let me see the loan estimate. And I look at the loan estimate, I'm like, hey, do you realize you're being charged 2 points? And they say, what's that? Okay, so I'm gonna tell you guys what that is. When you guys are getting a loan, if you are in contract to buy a house, the lender should be giving you what's known as a loan estimate within 3 days. That piece of paper is going to show what you're locked at, if you're locked at all, and how much you're paying that lender for that rate. 1 point is 1% of the loan amount. So on a $400,000 house, 1 point is $4,000. Seriously, it can be a lot. So really important that you guys have your eyes wide open and you're looking for this, because what I am seeing is because some of the call centers that survived on refinances for the last 2 years, they are desperate and they will do anything to get your business. So if you say, oh, I really want this rate, they'll say, sure, no problem. And you better check the fine print because they're charging you for it. And they do not have to tell you on the phone, oh yeah, that has 3 points. They should, but they just have to show it in writing when you get that loan estimate. So really be aware on that one, because we've seen some real doozies. Really bad stuff. Okay. What else? Good news. Let's do some good news. You want to do good news? I like good news too. Okay, self-employed borrowers. Guys, all the horrible things that we had to do to you for the last 2 years, they're rolled back. Yeah, so you can be a self-employed borrower and get a loan without being tormented anymore. Yay! I'm so happy for you guys. I know how hard it was to get a loan as a self-employed borrower during COVID, and I gotta tell you guys, I am so glad that stuff got rolled back. It was like Christmas when I heard about it. So that's fantastic news. The other good news, and we see this this is cyclical. So when you start to see conventional products, like your normal conforming loans, like you start to see the rates go up and high balance, and you start seeing jumbo get more interesting. So we are seeing, more aggressive rates from jumbo. We're seeing more jumbo players in the market, and we're also seeing looser guidelines. Yes, so looser guidelines on jumbo. I'm going to be doing some videos on that for you guys coming up. But overall, rates are going up, but everything else is getting better. So guidelines are loosening, more products are becoming available. I think we'll see more exotic products coming out. That's normal for this cycle of the market. And if you're a shopper right now, the key thing I have to say to you guys is supply is low. Okay, so you need a real estate agent that's creative, that's going to be able to get you guys into houses. I'm going to be doing a video about off-market houses. You guys need to be patient. You need to be persistent. and you need to try to not get emotionally attached. And I know how hard it is, but look, yes, you can get a home in this market. You just got to be patient and persistent. So I hope this video was helpful. As always, I am licensed in 48 states to do mortgages. So if you need one or you want to talk about one, please reach out. And questions, comments, please leave them in the body of YouTube. If this was helpful, like it. If you hated it, hate it. Either way, you're helping my algorithm. Thanks for watching, guys.